Introduction to real estate investing. Real estate investing involves purchasing properties to generate income or profit rather than for primary residence. This can include residential homes, commercial buildings, or undeveloped land. It is a popular wealth-building strategy due to its potential for appreciation, rental income, and tax benefits. Understanding the basics is crucial before embarking on this journey. Investors often seek to leverage property values and rental markets to grow their assets over time. This course will lay the groundwork for building a robust real estate portfolio. It provides essential insights for beginners looking to enter the market strategically. Why invest in real estate? Investing in real estate offers several compelling advantages for wealth creation and financial security. One primary benefit is the potential for passive income through rental properties, providing a steady cash flow. Properties often appreciate in value over time, leading to significant capital gains upon sale. Real estate can also serve as a hedge against inflation, as property values and rents tend to rise with the cost of living. Furthermore, investors can benefit from various tax deductions and depreciation allowances, which can reduce taxable income. Leveraging borrowed money to acquire assets, known as OPM, other people's money, is another powerful aspect. These combined factors make real estate an attractive asset class for long-term investors. Setting your investment goals. Clearly defining your investment goals is the cornerstone of a successful real estate portfolio. Begin by identifying whether you seek short-term gains, long-term wealth accumulation, or a steady stream of passive income. Your risk tolerance, available capital, and time commitment will significantly influence these objectives. Consider factors like the desired return on investment, ROI, and the specific types of properties that align with your financial aspirations. Establishing measurable and realistic goals provides a roadmap for your investment journey. Without clear objectives, it becomes challenging to make informed decisions and track progress effectively. This initial planning phase sets the stage for all subsequent investment activities. Understanding real estate markets. Thorough market analysis is essential for identifying profitable investment opportunities and mitigating risks. This involves studying local economic indicators such as job growth, population trends, and average income levels. Understanding supply and demand dynamics for various property types in specific areas is crucial. Researching historical property values and rental rates provides valuable insights into market stability and potential appreciation. Pay attention to interest rate fluctuations as they directly impact borrowing costs and buyer affordability. Analyzing zoning laws, future development plans, and infrastructure projects can reveal emerging hotspots or potential challenges. A deep understanding of market forces empowers investors to make data-driven decisions. Financing your first property. Securing the right financing is often the most critical step in acquiring your first investment property. Traditional mortgages are common, but various options exist, including conventional loans, FHA loans, and VA loans, each with specific eligibility criteria. Private lenders and hard money loans can offer quicker access to capital, but often come with higher interest rates. Consider exploring seller financing, where the property owner acts as the bank, or partnerships with other investors to pool resources. It is vital to understand interest rates, loan terms, down payment requirements, and closing costs associated with each financing method. Carefully evaluate your financial situation and choose the option that best aligns with your investment strategy and risk tolerance. Proper financing can significantly impact your cash flow and overall profitability. Types of investment properties. Real estate investing encompasses a diverse range of property types, each with unique characteristics and investment potential. Residential properties, such as single-family homes, duplexes, and apartment buildings, are popular for their consistent rental income and relatively stable demand. Commercial properties include office buildings, retail spaces, and industrial warehouses, often requiring larger capital but offering higher potential returns. Land investments, while speculative, can yield significant profits if developed or rezoned strategically. Specialized properties like hotels, self-storage facilities, or healthcare facilities also present niche opportunities. Understanding the nuances of each property type is crucial for aligning your investments with your goals and risk profile. Diversifying across different types can also help mitigate overall portfolio risk. Each category demands a distinct approach to management and valuation. Residential real estate. Pros and cons. Residential real estate, including single-family homes, duplexes, and small apartment buildings, is often the entry point for new investors. Its primary advantage lies in consistent demand for housing, providing a reliable source of rental income. Management can be more straightforward compared to commercial properties, and financing options are generally more accessible. However, residential investing also comes with its challenges. Tenant turnover can lead to vacancies and associated income loss. Property maintenance, including repairs and upgrades, requires ongoing attention and can be costly. Dealing with tenants, including screening, lease enforcement, and potential evictions, demands time and effort. Despite these drawbacks, the stability and growth potential often make residential properties a solid foundation for a real estate portfolio. Commercial real estate. Overview. Commercial real estate, CRE, encompasses properties used for business activities, offering distinct investment opportunities. This category includes office buildings, retail centers, industrial warehouses, and specialized properties like hotels or medical facilities. CRE often involves longer lease terms with businesses, potentially leading to more stable and predictable income streams than residential properties. Tenants typically handle many maintenance responsibilities, reducing owner workload. However, commercial properties usually require significantly higher upfront capital and more complex financing. Market fluctuations can have a more pronounced impact on commercial vacancies and rental rates. Understanding the specific industry trends and economic health of the area is paramount for successful CRE investment. Despite the complexities, the potential for higher returns and professional tenants attracts many experienced investors. Finding investment properties. Effectively sourcing investment properties is a critical skill for building your portfolio. Begin by leveraging online real estate platforms and listing services that specialize in investment properties. Connecting with experienced real estate agents who understand the investor market can provide access to off-market deals and valuable insights. Attending real estate auctions, both online and in person, can uncover properties at competitive prices, though they often come with higher risks. Networking with other investors, wholesalers, and property managers can lead to lucrative opportunities through referrals. Driving for dollars, where you actively search for distressed or vacant properties in target neighborhoods, is another proactive strategy. Persistence and a multifaceted approach are key to uncovering hidden gems. Always perform thorough due diligence on any potential acquisition. Due diligence and property analysis. Before committing to a purchase, rigorous due diligence and property analysis are absolutely essential. This process involves thoroughly inspecting the physical condition of the property, often with professional inspectors, to identify any hidden defects or necessary repairs. Obtain and review all relevant financial documents, including rental history, operating expenses, and tax records, to accurately project cash flow. Conduct a comprehensive market analysis to ensure the asking price aligns with comparable sales and rental rates in the area. Investigate zoning regulations, potential environmental hazards, and any existing liens or encumbrances on the title. A detailed financial pro forma, including potential income, expenses, and projected returns, should be created. This meticulous examination helps mitigate risks and confirms the property's viability as an investment. Never skip this crucial step, as it protects your investment. Making an offer and negotiation. Crafting a compelling offer and mastering negotiation skills are vital for successful property acquisition. Your offer should be based on your due diligence findings and market analysis, reflecting a fair price while also considering your investment goals. Include contingencies such as financing approval, satisfactory inspection results, and appraisal contingencies to protect your interests. Be prepared for counteroffers and multiple rounds of negotiation, as this is a standard part of the process. Effective communication, patience, and a clear understanding of your bottom line are crucial. Knowing when to walk away from a deal that doesn't meet your criteria is equally important. A well-structured offer, backed by solid research, strengthens your negotiating position. Always aim for a win-win outcome where both parties feel satisfied with the terms. Closing the deal and legal aspects. The closing process is the final stage of property acquisition, where ownership officially transfers from seller to buyer. This involves several critical steps, including establishing an escrow account to hold funds and documents securely. A thorough title search is conducted to ensure there are no outstanding liens or claims against the property. Review all closing documents meticulously, including the deed, promissory note, and mortgage agreement to confirm accuracy. Be prepared for various closing costs, such as legal fees, title insurance, appraisal fees, and recording fees. A final walkthrough of the property is essential to confirm its condition matches what was agreed upon. Engaging a reputable real estate attorney and a knowledgeable closing agent is highly recommended to navigate the legal complexities. Successful closing marks the official start of your real estate investment. Property management strategies. Effective property management is crucial for maximizing returns and ensuring the longevity of your real estate investments. You have two primary options: self-management or hiring a professional property manager. Self-management offers greater control and saves on management fees, but it demands significant time and effort for tasks like tenant screening, rent collection, and maintenance coordination. A professional property manager handles all these responsibilities, providing expertise and freeing up your time, but at a cost. Regardless of your choice, establishing clear communication channels with tenants and having a robust system for maintenance requests is vital. Regular property inspections help identify issues early and ensure compliance with lease terms. Choosing the right strategy depends on your time availability, experience, and the scale of your portfolio. A well-managed property leads to happier tenants and consistent income. Tenant acquisition and retention. Successful tenant acquisition and retention are fundamental to maintaining consistent rental income and minimizing vacancies. Begin by effectively marketing your property through online listings, social media, and local networks to attract a wide pool of prospective tenants. Implement a thorough tenant screening process, including background checks, credit checks, employment verification, and rental history reviews, to find reliable and responsible occupants. Once a tenant is selected, a clear and comprehensive lease agreement outlining all terms and conditions is essential. Focus on building positive landlord-tenant relationships through prompt communication and responsiveness to maintenance requests. Happy tenants are more likely to renew their leases, reducing turnover costs and ensuring steady cash flow. Providing a well-maintained property and a positive living experience significantly contributes to high retention rates. Proactive engagement fosters a stable and profitable investment. Maximizing rental income. Maximizing rental income involves strategic approaches to both revenue generation and expense management. Regularly review market rental rates to ensure your property is priced competitively, adjusting as needed to reflect current demand and property improvements. Consider implementing value-add improvements, such as minor renovations, appliance upgrades, or landscaping enhancements, which can justify higher rents. Explore additional income streams like pet fees, parking fees, or laundry facilities if appropriate for your property type. On the expense side, diligently track and control operating costs, including maintenance, utilities, and insurance, by seeking competitive bids and performing preventative maintenance. Efficient tenant screening reduces the risk of costly evictions and property damage. A proactive approach to both income and expense optimization directly contributes to higher net operating income and improved cash flow. Continuous evaluation of your property's financial performance is key. Understanding property valuation. Accurately valuing a property is a fundamental skill for any real estate investor. influencing both purchase decisions and portfolio assessment. The comparable sales approach, or comps, involves analyzing recent sales prices of similar properties in the same area. This is often the most common method for residential properties. The income approach, primarily used for income-generating properties, estimates value based on the property's potential to generate future income, typically using capitalization rates. The cost approach determines value by estimating the cost to replace the property new, minus depreciation, plus the value of the land. Understanding these different methodologies allows you to make informed decisions about property acquisition and assess the true worth of your assets. Combining these approaches often provides the most comprehensive valuation. A precise valuation helps avoid overpaying and ensures a profitable investment. Portfolio diversification strategies. Diversifying your real estate portfolio is a key strategy for mitigating risk and enhancing overall stability. Avoid putting all your investments into a single property type or geographical location. Consider investing in a mix of residential, commercial, and even industrial properties to spread your risk across different market segments. Geographically diversifying by investing in properties in different cities, states, or even countries can protect against localized economic downturns. Explore various investment strategies, such as long-term rentals, short-term rentals, or fix and flips, to balance different risk-reward profiles. Diversification can also involve investing in different asset classes beyond direct property ownership, such as real estate investment trusts, REITs, or real estate crowdfunding. A well-diversified portfolio is more resilient to market fluctuations and provides a more stable path to long-term wealth accumulation. It ensures that a downturn in one area does not jeopardize your entire investment. Scaling your real estate portfolio. Scaling your real estate portfolio involves strategically growing your investments to accelerate wealth accumulation. A common strategy is to reinvest profits from existing properties, using rental income or capital gains from sales to acquire new assets. Utilizing the 1031 exchange, which allows investors to defer capital gains taxes when selling one investment property and reinvesting the proceeds into a new like-kind property, can significantly boost growth. Forming partnerships with other investors can pool capital and expertise, enabling the acquisition of larger or more numerous properties. Systematizing your property management processes and building a reliable team of professionals, including realtors, contractors, and lenders, is crucial for efficient scaling. Continuously educating yourself on market trends and advanced investment strategies will unlock further opportunities. Scaling requires a long-term vision and a commitment to continuous learning and adaptation. This systematic approach allows for exponential growth over time. Risks and mitigation in real estate. While real estate investing offers significant rewards, it also carries inherent risks that must be understood and mitigated. Market downturns can lead to decreased property values and rental rates, impacting your equity and cash flow. Vacancy periods, where a property remains unrented, result in lost income and ongoing expenses. Unexpected maintenance and repair costs can significantly erode profits, especially for older properties. Economic factors like rising interest rates or inflation can increase borrowing costs and reduce purchasing power. Legal issues, such as tenant disputes or regulatory changes, can also pose challenges. Thorough due diligence, maintaining an emergency fund for repairs and vacancies, and diversifying your portfolio are crucial mitigation strategies. Staying informed about market conditions and having adequate insurance coverage further protects your investments. Proactive risk management is essential for long-term success and resilience. Long-term wealth building. Building a real estate portfolio is a powerful strategy for achieving long-term wealth and financial freedom. The compounding effect of appreciation, rental income, and debt paydown over decades can lead to substantial equity and passive income streams. Real estate can serve as a significant component of your legacy, providing financial security for future generations. Patience and a long-term perspective are paramount, as market fluctuations are normal, but historical trends show consistent growth over extended periods. Continuously refine your investment strategy, adapt to changing market conditions, and seek opportunities for value creation. The journey involves consistent effort, education, and strategic decision-making, but the rewards of a well-managed portfolio are immense. Ultimately, real estate investing offers a tangible path to financial independence and lasting prosperity. It empowers individuals to take control of their financial future